Have you ever wondered if it's a good idea to refinance your mortgage when interest rates are going up? A lot of people think refinancing only makes sense when rates are going down. But the truth is, there are times it might still be worth it. Yes, even if rates are rising. Hi, today we're going to break this down in simple terms. We'll talk about what refinancing means, why people usually do it, what happens when interest rates are going up, and a few situations where refinancing could still be the smart choice. By the end of this video, you'll understand the basics so you can feel more confident if you're thinking about refinancing. First, let's start with the basics. What is refinancing? Refinancing is when you replace your old mortgage with a new one, usually with a different interest rate, loan term, or loan type. Think of it like trading in your car for a newer model. You're still making monthly payments, but the deal you're on changes. Most people refinance when interest rates are lower, because a lower rate usually means you'll pay less each month and less over the life of your loan. But what if interest rates are rising? Does that mean refinancing is a bad idea? Not always. Let's talk about interest rates for a moment. Interest rates are like the cost of borrowing money. When rates are low, borrowing is cheaper. When they go up, borrowing costs more. Rates can rise for many reasons: changes in the economy, inflation, or decisions made by the Federal Reserve. When rates are rising, most people think, why would I refinance into a higher rate? That's a fair question. But refinancing isn't always just about getting the lowest interest rate. Here are a few times refinancing might still make sense even if rates are rising. 1. Switching from an adjustable rate mortgage to a fixed rate mortgage. If you have an adjustable rate mortgage, also called an ARM, your rate can go up and down over time. When rates are rising, your adjustable rate will likely go up too. Refinancing to a fixed rate loan can lock in your payment so you don't have to worry about big jumps in the future. 2. Shortening your loan term. Let's say you have 25 years left on your mortgage. If you refinance into a 15-year loan, your interest rate might be a little higher than your current one, but you could pay off your home much faster. That means you'll pay less total interest over time, even if your monthly payment is higher. 3. Getting cash out of your home. Maybe you want to make home improvements, pay off high-interest debt, or cover college costs. A cash-out refinance lets you borrow against your home's value. Even with a higher rate, it could be cheaper than using credit cards or personal loans. 4. Removing private mortgage insurance, PMI. If your home's value has gone up and you have enough equity, refinancing might let you get rid of PMI. That can lower your monthly payment, even if your interest rate is a bit higher. So how do you know if refinancing is worth it? Here are some things to think about. Monthly payment. Will the new loan make your monthly payment easier to handle, even with a higher rate? Total cost over time. Will you save money in the long run by paying off your loan faster or removing fees like PMI? Your plans. Are you staying in your home for many years? If you're moving soon, refinancing might not give you enough time to make up the costs. Closing costs. Remember, refinancing usually has fees. You want to be sure the benefits are bigger than the costs. The key is to look at the whole picture, not just the interest rate. Sometimes, a refinance can give you peace of mind, help you reach financial goals faster, or even free up money for important needs. It's also important to remember that every situation is different. The right choice for your neighbor might not be the right choice for you. That's why it's so important to talk with a trusted mortgage professional who can run the numbers for your specific situation. My goal is to help you understand your mortgage options in plain, simple language. If you're wondering whether refinancing makes sense for you, even in a rising rate market, let's talk. For more information, be sure to connect with us.
Thank you for watching my video. I hope you found it helpful, and I hope you would like to discuss it further. So if you would, please feel free to call me, Mitch Milat, Riviera Financial Mortgage, 424-290-8294. You can also email me, mitch@rivierafinancial.com. You can also find me on Instagram at Mitchell Milat, or on my Facebook homepage, Mitch Milat, Riviera Financial, Beverly Hills. Thank you so much. Look forward to talking to you soon and wishing you much success in the future.